we're just talking about 2018. I might be talking, might mention a little bit about 2017 taxes, but basically this will just be only about what's happening in 2018. Before we start, we're just going to say there was an important occurrence during the course of 2018 where the chairman of the SEC came out and he clarified some things for the general business community, and especially clarified a little bit for the accounting community also, where he said the technology is uses a currency, but it's not a security. The big thing is where tokens are issued by a company and a representative starts a venture, promises a return on your investment in it, or where you can get a secondary return by selling your token to somebody, that's a security. So if, we're just trying to make a differentiation between a security and a currency. For example, based on this, the cryptocurrency Bitcoin was basically, Bitcoin and Ethereum were both basically classified as cryptocurrencies because they are widely distributed. And he said, if you want to do a private placement of a security, that these things have to be governed by the SEC. You have to go through the whole legal system to get that kind of a thing done. So the AICPA, which is the accounting, the accounting governing board, said, hey, we're trying to understand what's going on. We're having difficulty with understanding what taxation is going on because there's only one real one piece of guidance that was published in 2014 that was about 6 pages long in typical federal government large font that gave some guidance as to what was going on. In 2016, the accounting governing body asked for more clarification, and that happened again in 2018. And the IRS still continues not to provide a whole lot of guidance to the accounting profession or to people who are preparing their income taxes about, how to do things. So we're doing things based on the current income taxation system of cryptocurrencies is really based around taxation of securities. There's broad parallels, securities that are being bought and sold on a major exchange. So these are some of the things that the AICPA has asked for clarification on. We're just trying to understand where things are going. Item number 9 is a Section 1031. I don't know if anybody in the room here has used Section 1031 treatment. It's called like-kind exchanges. If anybody has prepared their cryptocurrency gains or losses based on Section 1031, if you have, Section 1031 has been explicitly mentioned in the 2018 tax law as being something you may no longer use. We don't even know whether it was able to be used in prior years, but people did it, and I understand to some degree, that how people came up with thinking that they can use a like-kind exchange. How many people in the room are more or less professional? Have a pretty good knowledge? I should have asked this earlier. How many people in the room have a pretty good knowledge of taxes? Okay. And the rest of you guys, you're just kind of looking for guidance at this point. So let's go into the areas of guidance. We're thinking that there are some basic types of income that you can have from cryptocurrency. Trading gains and losses. This is basically the kind of thing that everybody is looking for. They're looking for a gain on their cryptocurrency sale. Or if you're a short, you're looking for the cryptocurrency to decline in price. Mining. There's last year there was a lot of interest in how do we figure out what our mining income is. There's exchanges for goods and barter, and I'm probably not going to talk about that very much due to the limited amount of time we have. Forks and airdrops, one of the esoteric things that we have in cryptocurrency that you don't have anywhere else, or it's really not named that. Employee payroll deductions and contractors paid in crypto. For example, if you go out to the folks who are paid, who are manning the booth at BitPay, they may say that many of their employees are paid in cryptocurrency to work at BitPay. So how do you figure out how much income is attributable to that cryptocurrency that you're receiving? And gaming income. This is kind of a new one because gaming has become a much bigger source of issues on the blockchain or within the area of having people pay a lot of money for a game. And how is it when you receive $100,000 of Bitcoin, for example, for winning a tournament? How do you value those kinds of things? Trading gains and losses. Computing your gain and loss is basically just what you're receiving on your sale proceeds, less what your cost is of the cryptocurrency that you purchased, and your cost is your initial coin cost plus your markup plus any fees, and fees include things like if you're transferring your cryptocurrency from one exchange to another. There are fees that you incur when you transfer things from one place to another. Shorter long-term gains. You must hold your cryptocurrency for more than a year in order to be eligible for long-term capital gain treatment. People in prior years have asked about what kind of inventory methods they can use to value their coins. You must use first in, first out, or specific identification. It's very difficult to use it, and there's a lot of people who say, well, I don't understand how I can use, why I have to use FIFO. It's very cumbersome to use. Yes, FIFO is very cumbersome to use, but that's just the way it is. And as I mentioned, Section 1031, like-kind exchanges, you are not eligible for that at this point in time. Yes?
Does moving it from one exchange to another invalidate the long-term holding?
No, it doesn't. It's just the amount of time that you've held the coin from, say if you bought it on Coinbase, you moved it to the time you move it to Kraken, and then sell it on Kraken, for example. That doesn't invalidate it. But converting it to another coin does. Yes, that's what a lot of people have been confused about. Is like, well, I have to deposit Bitcoin in a certain account so that I can buy it. In the old days it was Ethereum. So people are saying, well, if I'm converting from Bitcoin to Ethereum, there should be no gain or loss. Well, there is a gain or loss because you're basically saying, well, the IRS is saying that there is a conversion incident at that point. Yes, go ahead.
So you're talking a lot about gains and losses on cryptocurrencies with speculative valuations. What about stable coins? How are those treated in the law?
Well, those are treated the same way. Yeah, there should be no difference in treatment of those. You know, they're supposed to be, you know, they trade within a very narrow band, so there shouldn't be any issue with that. Okay. Mining income, I'm just going to pass on this one real fast because there's not a whole lot of miners in here any longer. But if you, if you are a miner, during 2018, you probably had a few losses, didn't you? Any miners in the room? I know Scott's a miner. Yeah. Okay. So you guys were miners. You had not a great year, but.
I have a nice museum in my house.
You have a nice museum in your house. There you go. Okay. You guys know all about just reporting your gains and losses based on, you know, your Schedule C or whatever it is. Mining pools, they just tell you how much coin you are earning, and they generally give you valuations as to what it is that you're receiving. Exchanges for goods and barter. The CFTC is also involved in, well, you know, how many agencies, how many federal agencies are involved in cryptocurrency at this point? You know, there's the SEC, there's the IRS, there's the CFTC, there's the controller of the currency. You know, you can just, it's at least 7 or 8 different ones at this point. So, for example, if you're paying with Bitcoin at overstock, you're required to determine the cost of the cryptocurrency that you have sold to overstock using, well, I don't have slide 13 anymore. How do you like that? Oh, well. So we're just going to slide by that one also. Forks and airdrops. We're going to continue to have forks and airdrops. You know, forks. We had a fork of Bitcoin Cash this year, and that's a programming change that results in a change of functionality. And the AICPA, the accounting board wants to see, wants the IRS to come out with guidance on that. So there is no guidance on how to value forks, but there is kind of anecdotal, not anecdotal, but there is practitioner guidance on this, which says on the date that you receive a fork or a coin that's been forked off, you're going to value it at some average value of 3. They always ask you to go to 3 different exchanges and come to a value as to how much, an average value of how much you earned on that date. So you should be using that. Airdrops, there's not a whole lot of airdrops going on nowadays, but they are taxable. Whatever you get from any of the airdrops is taxed as ordinary income, and you have to value it on the date of your receipt. Okay, employee payroll elections. Yes.
On the data, because the market trades 24 hours.
Right.
Can you pick any? Is it like I get deposits on Coinbase, so I just take whatever it says because that's kind of something I would approve, but I could make a debate on mining that it could have been another time.
Mm-hmm.
That's too nitpicky, I assume, or they don't care as long as it's on the day.
Yeah, they really don't care. It's just as long as it's on the day. Go ahead.
How, with the airdrops, assuming that an airdrop occurs and the token is not being traded on an exchange, how would you advise determining the valuation for that airdrop?
The way I would value that is you would find the first date that you could see any exchange trading it. I understand there are airdrops out there that aren't valued. They arrive and nobody knows, how to do it. You have to. It's your responsibility. Basically, the IRS is saying it's your responsibility at this point to do some sleuthing, to figure out, what exchanges are selling it, and you come up with a valuation on your own. It's incumbent upon you. For employee payroll deductions and contractors paid in cryptocurrency, typically the company that is paying you will tell you, we're giving you a certain amount of cryptocurrency that represents your salary. If you can just keep hold of all your correspondence with that company regarding what it is that you're receiving and what the value was on the date that you received it, just sum up all those numbers, you should be able to come to some sort of a reasonable value during that from the year as to what the value is that you're receiving. Yes.
Are there any tax advantages to getting paid in crypto?
I don't believe so. No. I look at it in a contrary method. I say, you're taking a risk. In contrast to receiving it in fiat. When you receive it in fiat, it's like you receive $1,000. When you receive your cryptocurrency, the cryptocurrency could go down, that day or the day after you receive it. You have no idea.
Will you write that off as a loss?
You would write that off as a loss at the point that you sell it. Yes. So why should you be receiving? In my mind is why should you be receiving compensation where you have the possibility of taking a loss? If you are a small employer and you're paying some of your employees in cryptocurrency, you have to report anything in excess of $600 in fair market value paid in the calendar year. That must be reported to the IRS. Scam and ICO losses. This was an interesting one because during the course of 2018, right in January, was it January 12th or so, we had the BitConnect scam that fell apart. If anybody in this room has a loss from BitConnect, my guess is that you can take that loss as a loss on a security. You can write that off. So that would be an example of a capital loss, BitConnect. Real quickly, inventory valuation methods, you must use FIFO or specific identification. First in, first out. If you've been received, I'm sure everybody in this room has been keeping good track of their purchases, and they know when things came in. So the cost of the first item that came in, on a Satoshi basis, if you're, when I was doing my income taxes this year, I realized that I had to split up my purchases, based on how many Satoshis I was purchasing for Bitcoin. Same thing, I guess you have to break up probably have to break up your cryptocurrency into fractions in order to value, subsequent sales, possibly.
What's the logic there? 'Cause if you're selling equities, you can pick whatever lot you want to sell. So that's everything else they're treating it like security, but that's inconsistent.
No, You can use specific identification, but you have to use it consistently with everything. You just can't mix and match. You must use one method or the other. So, I mean, does that answer the question?
Not really, but I mean, if that's what they said, that answers it, but
Yeah.
I can pick lots in my equity portfolio. I've got 5
Mhm.
tranches of Apple.
Mhm.
I can pick which lot I want to sell, and that's the consistency of my choice.
Well, yeah. If you're consistently using, I mean, you're telling the IRS you're using specific identification, all along with every lot. I mean, that's up to you. Okay. And I'm just showing an example of a 1099-K this year for someone, nobody has their name on there, but this is what the 1099-Ks have. They have the amount of sales that you have every month and a total number for the amount of sales that you've made during the course of the year. So when you're doing your capital gains schedules for the course of the year, there's really only one number that the IRS is looking. If this was the only 1099-K that you had, the IRS would be looking for one number on your tax return. They just want to make sure that you have $50,000 sitting on your tax return as what your proceeds are. And then everything else just kind of seems to flow downhill from there.
So, Peter, is that real, or are you doing a?
This is a real 1099-K.
Okay, so a friend of mine didn't get his.
He didn't get his because it didn't match the amount of. They have a minimum. This is a Coinbase 1099-K. So Coinbase only issues a 1099-K if you have over $20,000 of activity during the course of the year.
Okay, so I think this is the big question. I mean, I don't need to cut off your presentation, sorry, but
Mhm.
there's people that have been doing it right from the start.
Right.
And then there's this much bigger group that has said, I'll deal with it when the 1099s, I mean, Charles Schwab tomorrow said, we're not going to send out 1099s this year. How many people are going to go back and do their own records and report it, right? What's the risk we're running here? That eventually we're all going to get back audited for 7 years or 10 years or?
Well, if you don't include your proceeds for a tax year, you run the risk of the IRS saying you filed a fraudulent return. If you file a fraudulent return, there's no, they can go back and go back as far as they want to.
Thousands and thousands of people that have.
Yeah, and we're not, the manpower is so slim at the IRS at this point. I am not telling people to go ahead and risk it. I would never do that. And I would never do it to myself. But, some people seem to think that with staffing levels as low as they are at the IRS and with the equipment, not equipment shortages, but system shortages being, as endemic as they are at the IRS at this point, that they face no problems. But that's really not the case. Yes?
You said $20,000 of activity or profit or?
$20,000 of proceeds. Yep. Yep.
It says at least 200 orders and $20,000.
Okay. Thank you. Appreciate that. Yeah.
Yeah, I heard a case where a guy was holding Bitcoin and other coins from 2017 to 2018, and he made a lot of profit in 2017 and 2018, but he was holding it, he didn't sell it. And the IRS actually came at him and said, hey, you owe us tax money, but you never sold it. Yeah, is that still a thing?
Yeah, I couldn't speculate on that. Sorry. Yeah, I can't speculate on individual things. I apologize. I I think I'm running it to the end here. Yeah, I've got 1 minute to go. I'm going to wrap it up here because I could go on for a couple minutes more. But if you guys have any questions, come to me and we can talk about it. But go from there. Thanks very much for attending, guys.